So in today's video, let's talk about investing. Now, first of all, you might be questioning why I specifically want to talk about investing during a time where the economy is crazy at the moment and there's obviously all of this high inflation, and it just seems like maybe now isn't the best time to start investing. Well, what if I told you that I think that actually right now is probably the best time to start learning about investing, and if you're in a financial position where you can start investing, this is probably a really good time to do it too. Now, although I am a money coach, I am not a financial advisor, so I cannot tell you exactly what to invest in, but what I want to do in this video is talk through the investing basics, how you can actually get started with investing, and what you need to think about when you're trying to invest your money. And yes, you can definitely do this even if you are a complete beginner. So without further ado, let's get started. So first of all, when we're talking about investing, I like to always remember that when you invest into something, you are expecting some type of return back. So you may be investing time, or you might be investing capital. So you might actually be investing money into something. So when it comes to investing your time, for example, let's say that I wanted to invest in my own business, so I'm investing some time into growing my business, I will then be expecting some type of return back. Likewise, if I'm investing money into something, I will also be expecting some type of return back. For example, I may actually be expecting to make more money back than my original investment. So whenever I'm thinking about investing into something, whether that be time or money, I'm usually coming from the point where I think about what return am I going to get back. So if I'm going to invest this amount, what am I expecting to get back in the future? Now, when it comes to the different investment types, and a lot of these can be known as different asset classes, there are a few to choose from. Now, I like to think of some of them as quite conventional, so they're pretty popular, they're pretty known, and some are maybe a bit more unconventional. So when we're talking about investments that are maybe a bit more conventional, ideally you'd be thinking about equities and bonds. So for example, in this case, when it comes to equities, you are thinking about having shares of ownership in a particular company. So when people are talking about investing through the stock market, this is what they mean, and this is something that I personally do as well. Bonds are also something that potentially people could invest in. So these are almost kind of IOUs. So for example, governments can issue bonds, some companies can also issue bonds, and so with that, if you invest in a bond, you are expecting some type of interest back. So in this case, you could potentially be lending to the government. You could also invest in commodities. So for example, there's gold, silver, crude oil. Yes, these are also some things that you could potentially invest in. You also have cash, which is obviously very popular. So for example, if you've got savings or literally just cash, that is one. There is also real estate you could potentially invest in. So for example, if you're trying to buy out a property and you want to rent it out, and again, you're expecting rents to come back to you, so that's the return that you're expecting, that's also something that you can invest in. And then there are other investments which are maybe slightly unconventional. For example, you could be investing in cryptocurrencies. So you could be investing in Bitcoin, Ethereum. You could also invest in your own business. And there are so many different ways that you can invest in not only your business, but also other businesses as well. And if you're liking this video so far, then feel free to give me a thumbs up, as it really does help to support the channel, plus it's free. Now, I do want to talk about equities a bit more, just because most of my clients tend to want to invest in that, and also it's something that I personally invest in as well. So usually when we're talking about equities, you might also be hearing about investing through the stock market. And so essentially what you're trying to do is buy a small piece of ownership in these publicly listed companies. So these are going to be companies mainly listed on an exchange. So for example, they could be on the London Stock Exchange, they could be on the New York Stock Exchange, obviously depending on what country you're from, but these are publicly listed companies which you can actually buy a piece of ownership known as shares in these companies. So for example, if I bought a share of Apple, that means that essentially I own a very, very teeny piece of Apple. And you also don't have to invest in just individual companies as well. So you don't have to invest in Apple, McDonald's, or Microsoft, for example. You could actually invest in something called a fund. And what a fund essentially is a basket of companies. So rather than you investing in one company, you are essentially pooling together with other investors and investing in a basket of companies. And so if you've heard of things like index funds or ETFs, this is really where it comes from. So you would have a whole load of different companies in this fund, and each of you will own a small piece of each company within that fund. And so whenever I'm educating my clients around the difference between an individual company and maybe investing through a fund, so an index fund or an ETF, what I like to think of is literally supermarket shopping. So for example, if I was going on my own to just buy a bar of chocolate in a supermarket, I would look at that as literally investing in an individual company. However, what I could potentially do is bring a group of friends with me to think about our movie night together, and we would then bring a basket and we would all pool in different types of chocolates, sweets, tissue boxes, mints, whatever you name it. And within that basket, we then share a piece of ownership of every single item in that basket. And so that's how I tend to tell the difference between investing through an index fund or an ETF versus investing in individual companies. So hopefully that makes sense. Now, since I've spoken about so many different things that you could potentially invest in, a question you might be asking yourself is, how do I know what investment is right for me? Like, what investment should I be focusing on? And this is where it's going to be very important to be clear on your financial goals. So one of the biggest mistakes I see people doing is they just tend to get started with investing because they feel like they should get started because maybe someone's told them to, but they haven't necessarily linked it to their own financial goals. So they don't necessarily understand why they're actually investing in the first place. And the reason why I say this is because what might be a good investment for you may not be a great investment for me if we have completely different goals. So you want to be clear on what you're actually working towards and how investing is going to help you get there. So what type of investment is going to be best placed to help you reach your financial goals? So for example, with pretty much every woman I've worked with, one of their main goals is to become financially independent so that they have the option to do what they want to do when they want to do it. And so because they have the goal of financial independence, that will help them figure out what they want to invest in to help them reach the goal of financial independence. So in this case, for example, they may think about investing in the stock market, particularly because you don't need a lot of money to get started with investing in the stock market. But later on, they may think about investing in real estate and maybe their own business. But having the initial goal helps them to understand, first of all, what vehicle they might want to use, but also they then can understand how much they need to be investing in order for them to reach that goal as well. So before you even start throwing your money into the stock market, you really want to be clear on what you're working towards. Do you have a goal, for example, of financial independence, or is this going to be mainly for retirement? If that's the case, you want to be thinking about how much am I going to need and how is investing through the stock market going to help me get there? Because what you might be at risk of doing is just putting money into the stock market, not really knowing what it's for, and then not being consistent. And then when you then don't reach your goals, you'll be questioning why you didn't do that. The reason being is because you didn't link the idea of investing with your current goal. Now, one of the things you also want to think about is your attitude to risk. And what I mean by this is how comfortable are you at taking risk? And this is a big mistake that people tend to miss out on and not think about, because maybe they think that whatever you invest in is equal and the same, specifically when it comes to risk. So you really want to understand how comfortable are you at taking risk. If you're like a huge risk taker and you don't mind taking a lot of risk, that's going to be very different compared to someone who just doesn't want to take a lot of risk at all and is very, very risk averse. And so in terms of how comfortable you are at taking risk will also guide you in terms of what things you should actually invest in. So for example, and I'm not speaking for all women, but I will say for some women, especially most of the women that I work with, we aren't maybe the greatest risk takers. Like, we can be relatively risk averse, and some of us may be more risk averse compared to others. And so that's going to help you understand what what you should be investing in. So for example, when we're talking about the stock market, so based on what I actually invest in, yes, I do invest in some individual companies, but it is definitely not as much compared to my investments in index funds and ETFs. And the reason being is because when it comes to individual companies, I feel that that carries a lot more risk compared to investing in funds. So compared to investing in a basket of companies. And why I say that is because when you're investing in an individual company, what you're essentially doing is putting all of your eggs in that one basket. So if that company became bankrupt, you would essentially lose all your money because you're invested in that one company. Whereas if you were to invest in an index fund or an ETF, it is not just one company, it is a basket of different companies. So even if there was one company that became bankrupt, it wouldn't necessarily completely affect all of the companies within that basket. And so I see that as less risk. So I would prefer to invest in that because of my attitude to risk. Whereas my husband, on the other hand, is 100% happy to take a lot of risk. So I know for myself that I'm much more risk averse. And so I would rather invest in index funds and ETFs. But at the same time, my return, so how much I get back, may not be as much as I would have done had I invested in an individual company. However, if I'm taking into consideration my risk tolerance and how comfortable I'm at taking risks, I would rather just take the lower returns, but know that even though I'm having lower returns, I'm less likely to lose money just because I've spread my risk around and I'm not investing in just one company. Okay, so now you have an idea in terms of what you might potentially want to invest in, and hopefully you've matched that with your financial goals. Plus at the same time, you obviously want to think about your own attitude to risk. My next tip would be to then think about one thing you want to invest in, research it, master it before you move on to something else. So let me be clear, I'm not saying that you should just invest in the stock market and do that for the rest of your life and that's it. What I'm saying is that you want to pick one investment vehicle, master that well, understand it, and once you've done that, you can then of course choose to move on to different investments. So for example, I teach my clients how to invest in the stock market mainly because it's one of the easiest ways to get started with investing, and also you don't need a lot of money. However, once they've done that and they've mastered it, they are free to think about other investment vehicles. Maybe they want to invest in real estate later on, maybe they want to invest in their own business. Whatever it is, it's kind of important just to master one, because first of all, you want to feel comfortable in terms of what you're investing in, especially if you are investing money into something, but also you want to be well educated around the subject just in case the environment changes. For example, if you are investing through the stock market, you're not always guaranteed to make money every single day of the month. There are going to be times where your investments go up and there are going to be times where your investments go down. And so you want to be at the point where you're well educated enough to understand that and not let those swings impact your decisions. Again, one of the biggest mistakes I see is that people just end up throwing their money into the stock market without actually educating themselves around the topic. And so when things go south and the market ends up going down and they see that their investments have gone down, some people tend to get very worried and decide to just sell all of their investments, worried that it's going to go down even further, and they end up losing money. That is not what you want to do. Again, I'm not giving financial advice, but you want to make sure you're well educated around the subject, master it well, and then once you've done that, it then frees you up to think about other investments too. Now, if you are someone who would absolutely love to start investing your money, but you have no idea how to get started, particularly if you're thinking about investing through the stock market, but all the information out there just seems very, very overwhelming, or maybe you're just the type of person who thinks that investing isn't for you, and I do see this with a lot of women. Please note that women are amazing investors, but if you are looking for more guidance or support, then definitely check out my one-on-one coaching, because I can essentially walk you through the whole investing process, literally step by step, where we'll make sure that you're very clear on your goals and how investing can help you achieve your goals. And we can also walk through how comfortable you are at taking risk as well when it comes to investing. So make sure you do check that out if you haven't already. You can book a free call to find out more about the program. So I'll link more information up here for you and in the description below. Now, yes, there is a lot going on and a lot of negative negative news at the moment, but I would definitely say that this is one of the opportunities you could have to really set yourself up for the future when you're thinking about investing. So particularly if you are in a financial position to do it, but something is holding you back, really take the time to just get educated, understand the concept, understand how comfortable you are at taking risks, but don't be afraid to take the leap, because I have a feeling your future self will thank you for it. So if you did like this video, then please do give me a thumbs up if you haven't already, and let me know in the comments, what are your thoughts on investing right now? I do post every Tuesday, so if you would like to know more, then of course you can subscribe to my channel, and I will see you guys next week.